Welcome to the Market Alert for Friday the 11th of March 2016. So yesterday Super Mario came out and dropped rates to zero, more negative on deposits, and the gold market took off as a reaction to what he'd actually done. And there's no surprise there. To show you a gold chart, gold's been moving up now since the beginning of January, as has the silver price also. No surprise, you're going to see new all-time highs in gold this year. The last time was 2011 when we had a high in September of just $1,900 per ounce. But you can see now the trend has changed in the gold market. We just need to break the 1,281 and then we're off to the races. I have absolutely no doubts where this market's going. The credibility, the lack of effectiveness of having printed trillions around the globe by the central banks has failed miserably, and we're going to see more misery coming in the next couple of weeks as well. We've got Yellen's speech next week, 2-day event, and after that the carnage will start, because the poor woman's painted herself into a corner where whatever she does, the market's not going to like. If she reduces rates, lack of credibility. She keeps them on hold, lack of credibility as the strong labour market, which was her reason for increasing interest rates, still continues according to the non-farm payroll figures that we saw last Friday. And if she does nothing, again, lack of credibility. And there is a major credibility problem now with all of the central bankers, Carney, Draghi, Yellen, to name but a few. And then, of course, all of the assistant federal central banker people as well, that they've got all the other members that are being wheeled out on it seems like a daily basis as well, to keep the central bank show and Ponzi scheme alive. So yesterday the market's reaction, well, we saw the market move up sharply after Draghi made his announcement, and then we can see what happened. And this is the problem. Great analogy by Peter Schiff. The market is like a heroin addict. In 2008 to 2015, the effectiveness of QE was pretty good. It was like getting a shot in the arm of heroin. Great reaction. The market loved it. And now, of course, what they're doing, the same thing that happens to people that have drink problems or drug problems, is that you have to keep pumping more in to get the same effect. But at the end of the day, the patient is dying, and you can see the lack of effectiveness of the actual drugs there. You can see that the drop off. That said, of course, last night we see the plunge protection team enter back into the fray and move the market back to the upside, where we've seen that the market go back and to the highs where the market actually sold off, which you can see there back at the 17,100. They want the market above the 17,000 level, which I spoke about earlier on in the week. So the market moved down 113 points in the first trade. The market then sideways before the plunge protection team, as I say, came in the evening and moved the market back up another 70 or 80 points. We actually moved it up over 150 points, as you can see from there, from the low here at 16,850 all the way back up there. So a good day, apart from the one loss there, 46 points, but profitable overall for the actual trading session. In the daily chart, this is what we want to see. We're heading back to this level here, a crucial level, and I wouldn't be at all surprised if we don't see the market move higher through to this point. News-wise, what have we got? Imports out at 130. There's nothing else today, so the market's going to use the momentum from Draghi's creative accounting yesterday in order to keep the market moving to the upside. On the implied volatility, we can see that 1570, brilliant reaction yesterday from this, because we would have thought the market would have seen a bigger spike in the implied. So obviously this has been fudged along with the VIX to show there's no real risk in the market, even though Draghi's done what he's done. And therefore I would expect this to continue lower also in the short term. Like I say, D-Day is next week with Yellen. From sort of Friday onwards. I think it's Wednesday and Thursday next week. I will check and let you know. But or it could be Tuesday and Wednesday. I can't remember now which way they work. Some of the testimony she gives is Wednesday, Thursday, and some's Tuesday and Wednesday. However, we will know beforehand. But after that, the following week, the last 2 weeks of March, I'm expecting this market to start falling apart, and it's not just me either. And the implied volatility is also showing that. You can see the blue line now moving sharply down there as well to take care of a beautiful setup ready for the next wave down. So really, that's about it for today. The reaction is exactly what we want. Keep the Ponzi scheme alive. Let's go negative as far as we can go. But certainly the central banks now are running out of tools. I thought at one time they might have a lot more, but as we go towards negative and they can see it's not happening, the markets are starting to fall apart anyway. So it's happening by itself. I thought we might have needed some other catalyst. I mean, I know Deutsche Bank has still got problems. They're converting debt to equity and all sorts of other weird and wonderful things at the moment. The Chinese are nationalizing their debt as well, which is always an interesting thing to see. God help the Chinese people, that's all I can say, in the generations to come. It seems that they've adopted the Western philosophy, hook, line and sinker, when it comes to the Keynesian type of economics, but there you go. Anyway, enough of that. I will see you in tomorrow's edition, which will actually be Mondays because it's actually Friday. So see you on Monday. I'll probably record over the weekend, unless there's a volatile day today. Then we'll need to see the market open on Monday first, just to gauge a better picture and reaction. Other than that, suffice to say, have a great weekend. See you in Monday's edition of the Market Alert. If anything happens today, I'll let you know. Other than that, thanks for watching.